This couldn't happen again. This is that one. This couldn't happen again. This is that one. This couldn't happen again.
Welcome. We are back. Another day in the market. What's up? Chetta is back in the chat. Keanu trades. Plevere Zeke, how you doing? Crazy day yet again. The volatility continues both ways. Today was to the upside, which was pretty intense, I believe. I forgot who said in the Discord, but join the Discord and you can find out for yourself. Today was the best day for the Nasdaq in exactly a year, which is crazy to think about. And it doesn't even look like a huge, like if we just look at the candle, I mean, this candle looks much smaller than a candle like this. But this day was 3.3%, today was 3.6%, because in reality, the candle should look something like this if we're including the gap. So you had a pretty large gap up, and yeah, really green day across the board. The first probably 4 or 5 hours of the day was very slow price action after the gap up, and then you started seeing some momentum towards the afternoon. So we're going to get back to that. We also have Bitcoin, which shot up way before everything else last night. I think Yellen had some comments about the Biden report on crypto regulation being like good or something last night, and Bitcoin shot up. It was already up like 7% pretty much exactly 24 hours ago, maybe a little bit less. So before we even look at the charts, we can look at a couple different things that happened. We're going to start off with what I was just talking about. So first off, we had Biden. We talked about this, I think, last week. We had Biden sign an executive order for digital assets. Really, I think the easiest way to look at this in general was you've waited for regulation for a long time. Not necessarily that people wanted regulation for crypto, but just it's one of the things. It's like that's always been something that the bears were able to say, oh, just wait till regulation happens, just wait till you get regulation. And well, now it's here and it's not really that big of a deal. And I think maybe a lot of people are realizing that there's really not much that can be done in terms of the government trying to regulate crypto, apart from taxes, of course, which is very important. But they can't actually like shut down Bitcoin or something like China's tried to do. multiple times. So you had a few different things here. And in general, they just want to create a little bit more stability, make sure that there's not people getting scammed all the time, and just make sure the system's not going to affect our economy in a bad way. So I don't really think there was anything that was bad here. I'm not really an expert on this stuff either. And then once again, reiterating, the Fed's talked about this before. I know Powell has spoken on it. Even recently, I think in his last speech, somebody asked him about, you know, like a government coin or something like that. And he wasn't actually a huge fan of it for right now, but he says something along the lines like it's still possible. Or you can go back and watch that yourself. But exploring a central bank digital currency. So I guess they're still doing some research on that. There was a whole paper or report that they put out, I think like a month ago or something. I'm sure you guys remember about that. And that, I think that was bad for Bitcoin or something. Let me skip that song. So we have that first off. And then tomorrow morning, I don't know if the time is here. Tomorrow at 8:30 in the morning, we're gonna have CPI. So the last time we had CPI, I believe, was I think it's month over month. So we get it once a month, I believe. And tomorrow morning we're gonna have CPI. Of course, inflation's been at the forefront of most of the media covering the market this whole entire year with how inflation has gone up. So over here it's saying economists expect about 7.8% tomorrow morning. I don't remember what the last one was. I don't know if it says it here. So and of course these are the numbers for last month, February, but they're expecting in February inflation rose 0.7%, or 7.8% year over year, which is that same 7.8 number you see over here. So let's see, as you can see in general, this is a nice interactive chart. So January it was 7.5%. So there's your slight increase. And of course, we do have things that could affect it in general with everything that's going on in Ukraine that's affected global supply chains. But excluding energy and food, and energy is probably the biggest factor that a lot of people are focused on right now. Core CPI was expected to be up 0.5% below January's 0.6% gain. So we're going to see what these numbers look like in the morning. This could affect the market in either direction. The one thing I will say is most people already are expecting inflation to be pretty hot, and not in a good way. So we will see what happens. Of course, we'll talk about oil in a second. So you have that tomorrow morning to watch out for. And it's interesting that we did see such a big, green day for the market. I don't really think there was much. I mean, there were a couple like smaller catalysts, but in front of like Fed meetings and CPI numbers, I just off the top of my head, I remember having multiple red days. And it's actually, I want to go look back at the last CPI number or at least in January. I think there was one time where on the day of CPI numbers coming out, we had a really green day, and then the next day we like completely dumped. I don't know if that was January or last month when the report came out, but I do remember that happening like once or twice. So you never know, you could always have a delayed reaction. So look for that tomorrow morning. And then also after hours today, Amazon announced a 20-for-1 stock split. This might have to be approved by shareholders. I mean, even if it does, I'd be surprised if it wasn't approved. And then also a $10 billion buyback. In my opinion, that's not really major. But the stock split's the big thing here. I believe the last time, it says it right here, the last time was since 1999. Of course, the word buyback just in the title helps things, look better, of course. And then I think it was up like 12% after hours at one point, but it closed after hours. We can take a look at closed after hours up 6%. So I was actually looking at Amazon for calls earlier today. In premium, we have this bullseye bot over here, and it alerted some Amazon calls. Also alerted some Tesla calls. We're going to talk a lot about Tesla tonight. That's going to be one of the main focuses tonight. These ones, I mean, this was like the exact low of day. Go look at Tesla at 9:50 a.m. That was like the low of day for Tesla pretty much. But it alerted Amazon calls. So I went over to the Amazon chart earlier today, and I didn't end up getting the calls. Honestly, I don't even know if I would have overnighted them, even if I did get them, but still did see this earlier. There were weekly calls. I mean, these, unless something crazy happens with like CPI or something in the morning, these could be up a lot. But yeah, I know there was already interesting flow for Amazon. I mean, just a lot of the times you're going to see interesting flow before things like these. There's people that are illegally trading, and some people are not that smart about it. I think there was also some reports, I saw Unusual Whales tweet on where you tweet as Twitter, but They talked about somebody was like loading up Activision. I don't know if it was calls or something right before the Microsoft acquisition. Now they're getting investigated. So people try to be people try to be smart, but they're stupid. So those are a few different things, and I don't know. I want to start doing this on the streams every night. Just kind of I try to pull up 3 or 4 links that are important, and we'll just go over them. This is another thing I want to look over. I was watching, I think their name is Millennial Money. It's a podcast, and they were looking at a few of these charts, and I have seen a lot of these through Twitter, so I was able to find like the actual link to all of this. But this came out on March 9th, 2022, I believe. So this is we're just looking at price to earnings, I believe, and one thing I want to look at over here, and this is what they were looking at their podcast last night. So you can see S&P 500 large cap. You know, it's pretty correlated to what the market has done. This pretty much looks, I mean, this is not stock price, by the way, okay? These are PE ratios. These are not stock prices, but this looks like if you were to overlap the actual S&P stock price over this, it pretty much looks similar. Same thing to an extent for mid. I don't think that mid caps also, but for mid caps and small caps in general, you can see there's a big difference. And what they were looking at yesterday on the stream was pretty much in 2 decades, every time you got down to these levels, right? And I talked about this on the stream a couple times before. I was just never able to find the link. But every single time we've gone down to these multiples for small caps, you've pretty much bombed out. I mean, you went lower in 2008 with the Great Recession, so you still could go lower even in 2020. So, but just in general, like if we were to draw a line right here, you could see you have 2 bottoms over here, one over here, kind of one here. So these levels, you know, just look at it. You know, it's not an RSI, but think about it as an RSI. You're getting down to those oversold levels. But yeah, there's a lot of cool stuff here. These are forward PE ratios. This is 500, 400, and 600. So you can just see the 500 as your large caps. I believe this is going to be much higher than what happened with small caps and mid caps. So I mean, I'm gonna talk a little about this when I talk about the Russell 2000 later. But I was looking at another small cap index today. It looked interesting to me, so I just wanted to bring that up ahead of time. So now we can talk about the charts. So starting with Bitcoin, which had a good spike last night and held its gains today, pretty much put in another higher low. So the swing for Bitcoin is back in profit. It's never hit the stop loss. It's been in profit and in a loss like probably 3 or 4 times now, but now it's back up 3%. And you're trying to make a 3rd higher low in a row, which is very interesting. I did see Mitch Ray tweet about this last night. You know, you're seeing some accumulation for the first time in a long time. And you did kind of reject 42K. I already had that charted on the daily. You did reject 42K on the first test of it. It was support here, resistance back over here, resistance. It was an all-time high at one point in January of 2021. So hopefully you can break over that, but overall still the same thing as I've been saying. You're still in between 34K and 45K. So you got to break one way or the other for a better direction or potential direction judgment. Ethereum also spiked up, but this is still in the middle of this triangular pennant. So not much can really be said about Ethereum technically. Yes, that's really it for crypto. Nothing crazy, just moving pretty nicely off the report. So let's move over to some other markets before we talk about stocks. Crude oil futures, I've been saying, you know, that these are getting overbought. I said the same thing for gold. I wonder if gold pulled back today. Probably did, yeah. So I did say probably every single night this stream, we've been looking at gold and crude oil futures. I've been saying every night that they are overbought. But I also have been saying that there isn't much resistance to all-time highs. And I mean, there still isn't, right? So I think you got to a point where you were just getting insanely overbought. And of course, you know, you're gonna see pullbacks like that when you go up as much as you have in the past few months. So, you know, to get a pullback like that, it's just very how do I put this? In general for charts, when you have such a parabolic run, the other side of the fence, as Mitch Ray would say, or the back half of the trade, as other people would say, is typically a lot quicker than the front side. But again, you know, that doesn't mean that this was the top. It still could just make a higher low, maybe at some point, create hidden bullish divergence, run up again. I think this was just technically very overbought. You know, the RSI was at 83. The last time I was there was February, and that was pretty much a peak as well. So yeah, you got that. One thing that is interesting though is that you weren't able to successfully hold the resistance that we keep talking about. Make sure this is on the weekly. So if we go over to the weekly, you were not able to hold above the previous resistance. It would have been much more interesting if that actually held today and back tested as support, but it did not. It went back under it. So at this point, you definitely have a blow off the top. You have a bearish engulfing candle, and you're back under resistance. So I'd say just short term, this is starting to look more bearish than bullish, but that could easily change if you reclaim and spring back above that resistance, maybe back tested too. So we'll see what happens. And then gold, pretty much the same thing, bearish engulfing candle. Got pretty close to testing all, pretty much retested all-time highs and failed to break above it. I said that was the final resistance. 1921 is your support at this point. It was your highs from last May. Even held it as your low on March 3rd, so look for that level to potentially be tested if this pullback continues. And if you did watch last night's stream, I talked about the potential for another cup and handle here. So if it does continue pulling back, there's always that possibility, but it's not really even a pattern for right now. The dollar pulled back as well, but this did back test successfully. Unlike crude oil futures, this perfectly tapped its previous supply line. If you connect the high from November 24th and February 24th, it perfectly held that and then even bounced off of it about 1/3%. That's pretty interesting. That's also a horizontal level dating back to this high. So that's how the dollar's looking. Oh, let's see what silver did. I know it filled its gap from yesterday's gap ups. Yeah, silver filled its gap and is trying to flip a previous resistance zone into a support. It'll be really interesting if this does hold. It could eventually still run up to 25 like I was talking about earlier. And those are just some other markets. Now let's move over to the overall stock market. I'm going to give my breakdown on my thoughts for the market heading into CPI numbers tomorrow, what levels I'm going to be watching. After that, we're going to talk about CLOV, Fisker. I'm going to spend a good amount of time talking about Tesla tonight, which I'm keeping a very close eye on solely for technicals. Let me make sure Amazon's on my watch list so we can talk about that after the split. And we'll talk about the new swing. There is a new swing. If you're in the Discord, if you follow me on Twitter, you already know what it is. It's something I've showed on stream multiple times in the past few weeks, and I finally put out a swing on it. I think I even said a couple days ago there's probably going to be a swing on it soon. Alright, so let's get started. Before we, actually no, we're going to start with the SPY like usual. Alright, so what's good with the market right now? You were up almost 3% on the S&P today. You gapped up today. And we go over to the 5-minute. You spent a good amount of time over here. You spent about 2 hours just going sideways. You know, you gapped up, you pulled back. You were just pretty much flat up until about noon. And then right before noon, you started soaring again. And then you were kind of flat again. So this was pretty much probably the most tradable part of the day, I'd say. Maybe even this as well. But yeah, the price action today was pretty simple. You gapped up, which actually did surprise me. I wasn't expecting a gap up like that today. But you gapped up, you went sideways, and really why you saw a lot of consolidation at this 426 level, I think at least, is you can see it was your lows from your, literally it was your swing low last October. So I have this blue zone chart on the S&P. The reason that the top of the zone is at 426 is because of this low, and then the bottom of my zone is at 421 because of a couple highs over here and this low from January 24th. So this is like my big inflection zone that I have for the S&P 500. So you were just kind of testing the top of it, and then you finally broke it, and that's when you saw a big push. And I was updating all of this throughout the day in the Discord for everybody. So make sure you join the Discord. The link is in the description. Scroll way up. So I was updating right when it broke out of that previous high from yesterday as well. I gave an update on that. So trying to give as many updates as possible intraday. And then towards the end of the day, you sold off after a crazy big green day. You can't be surprised with that. You also did break low domain line on lower time frames. Honestly, most of the intraday technicals from today probably won't matter much because we have CPI numbers tomorrow morning, unless the CPI numbers just do nothing at all. That's always possible, I guess. But I'm not going to be too focused on talking about like the low time frames tonight. Probably just the higher time frames is going to be the focus. So what if we move this over here? Now you potentially have your first higher low. Literally on the 4 hour. Let me see. Let's just take a fresh look at this, all right? Higher lows, lower low, lower low. So You were getting your higher lows, I mean, for a very, very long time for the market. Then you started making lower lows from here to here. And this might be the first time of this whole entire year that you're seeing a potential higher low on higher time frames. So, I mean, even this, I'd probably keep this supply line how I have it, but you could just look at it like this, and then it's pretty much like a dragon pattern. So you have that on like your 4-hour time frame. Most of the indices look very similar to that on the 4-hour, which I'll show you in a little bit. And then on the daily, you are back above your inflection zone. So the issue here is, you know, we're keep testing it. We're bouncing off of it, then we're breaking under it, then we're bouncing back above it, then we're breaking under it. You're not really respecting the zone, which makes it a lot harder to trade off of this zone. But I still do think that this zone is a pretty easy way just to judge whether we're holding a big area or not for the market. And if you did watch last night's stream, I did talk about this. I talked about how we kind of had like this inverted hammer candle type of pattern. But I did say last night's stream, I probably wouldn't even think about that unless we had like a nice big green candle tomorrow. If you go back and watch last night's stream, and surprisingly we did. I was genuinely surprised because we had 2 days. We had not only 1 day of breaking back under the zone, but yesterday we retested it as resistance and then sold off again into the close, which is just kind of, it's bearish in a sense, but it also did create that inverted hammer. And you did see a follow through candle after it. So typically on most of these hammer candle patterns or shooting stars and whatnot, when they're trend changing candles, you want to see a follow through candle, right? You want to see a candle confirm it. So typically it's not just, oh, you know, I have a hammer, like let's just say like right over here, like, oh, I have a hammer candle, it's going to go up for sure. You want to wait for the candle after to give you some more confirmation and to confirm that potential trend change. That's in the course, links in the description. Go to the candlesticks and support video. So you were able to hold that. So that's your S&P 500. The QQQ also, if we go over to the 4-hour, looks very similar. Kind of getting this potential higher low double bottom formation. So it does create an easy way to manage risk, because you still know all you want to do is stay above your lows from February 24th for the whole entire market, or at least the indices. You just want to stay above those lows. And this does look interesting. You're getting this double bottom and this downsloping wedge. You're trying to reclaim this 334 level, which was your low from January 24th. Resistance at the end of last May, support in the end of last April. It's a big level, this 334. So if you can hold that, you can test all these levels above you one by one. You know, you'll have to see how it goes. But yeah, that's the QQQ. Nothing too crazy. Again, I don't really want to focus on lower time frames tonight. Give me 1 second. I want to delete all my alerts for tomorrow for the market. These are pretty unparalleled. I set probably 15 to 20 alerts every single day just on the indices alone. So I have to reset them like every night, and I forget, which annoys me. All right, so now let's move on to the ARK ETF, and then we're going to spend some time talking about small caps. So ARK ETF, $50 is a big level that I've been talking about. You're still $11 higher than that level. You might not ever get there, but it's just such a nice technical area. You have this previous resistance, a bullish fat PCZ roughly. It would just be really interesting if it did get there. However, it's not there for now. So what do you have? You're still somewhat trying to hold this high before the COVID crash and this back test of that high at $61. You got back above it today, and you're still in this down sloping wedge. So let's really zoom in here. I think it's close enough. I mean, in general, if you just zoom out, you could see you're making lower lows in general, and you're relatively losing negative momentum. Maybe you could argue it on your MACD, but it's very clear on your RSI that you are making higher lows. So interesting price action there. That classic bullish divergence is starting to develop, and that same potential higher low, or for the ARK actually, it's a slightly lower low double bottom. It sold off a little bit more than the other indices, which did create some 4-hour classic bullish divergence. Looks like I already charted. So that's your ARK ETF. And now we're going to look at small caps for a little bit. So of course we have the Russell 2000, which I've been saying all week. It's just in a range between 188 and 205. So until it breaks range, there's not much that can be done. I actually did share some Russell calls, although Zeke for Bleak in the Discord shared this falling wedge, and I saw a break out of it yesterday. I shared some Russell calls. I think they went up like 100%. in premium, but like apart from like lower time frames, on the higher time frames, it's just 50-50 until it breaks above 205 or breaks under 188 for the most part. However, on the 1 hour, as long as you stay above like 193, as long as you don't fall back under 193 before you get back to the top of the range, then you have a partial decline, which means the bears were not able to take it all the way back down to the bottom of the range before the bulls were able to take it back up, which would give you a 70% chance of breakout if you got back up here first before breaking that level. So we'll see if it can do that. But I was looking at this today. This is the Direxion small cap bull 3x shares. And it's similar to the Russell in a sense of like you were kind of in that range for like a full year, right? You were kind of in that range for like a full year and then you broke down and now you're going sideways, right? But the context is a little bit different on this. You can see that this is actually well under its pre-COVID highs, okay? However, the Russell is not even close to its pre-COVID highs. Those are all the way down over here. So that's different. Also on this ETF, I guess, you're back testing this little double bottom area, which led to a really nice rally right before the COVID crash at $49.50. You double bottomed off of that yet again. Okay, so you're showing a very, very similar formation at the same exact level as you were before I moved back up to 75. So I was looking at this earlier today, and this was up 8% today. I think it even broke a supply line, or it's testing, all right? So also you can see this wedge. It's pretty much testing a supply line of a wedge on the 4 hour as well. So this is like a different way to look at small caps, I guess. I'm not too sure what's included in this. I've never looked at it before today. I don't think so, at least. So that's pretty interesting. Like even if we chart this on the daily, which you can do the same thing on the Russell, but you can see you're getting close to testing that breakout level for another type of small cap ETF. So that's the overall market. Let's talk about some individual names now. CLOV was up another 5% today. We're putting a new high all the way up to 327. Good. We talked about the inverse head and shoulders on Sunday night. After we saw last Friday, Chelsea Clinton filed that she was buying, I guess, and that spiked up CLOV, I think like 6 or 7% last Friday after hours. And there you go. Inverse head and shoulders broke out of this neckline. Now it's testing a breakout of this little, you see these two highs from January 20th and February 2nd. It's testing a breakout of that resistance. If you break that, your next resistance is around 338 from this high for CLOV, and then support could be anywhere within this blue zone for CLOV as well. So a lot of the hard work's already been done. The only thing is you are up 43% on the week, which is a lot for 1 week, but at the same time, you know, if you look at it from a dollar perspective, you're only up almost $1 on the week when, you know, you used to have crazy dollar swings like in a day before. So, you know, obviously things have changed for this stock. But you're well out of the wedge. I mean, you've seen this wedge on my chart for the last 2 or 3 months at this point. I talked about the breakout the day of earnings at $2, and it's playing out, okay? The classic bullish divergence, the wedge, the earnings, the buying activity, that's all playing out together, catalysts and technicals, and you know, you definitely need the catalyst first for all this stuff to be playing out. But it's nice to see it, and hopefully we can keep going. These are all my levels on the 1 hour chart. If anybody wants to screenshot, and that's really it. But really good moves. Fisker is next. So actually on lower time frames, Fisker is showing an inverse head and shoulders on the 15-minute. We'll see. I mean, if it gaps up or down tomorrow, that could, you know, make or break this. But it was inverse head and shoulders after hitting the PCZ of a bat, and that bat's kind of already been playing out. It pretty much hit the B point. But I was watching that today. And on the 1 hour, let's remove this for a second. And what if we look at it like this? Okay. We take a look at the 1 hour. What if we look at it like this? You're kind of also testing a breakout of this somewhat triangle. You have 3 touches on your demand line, 2 touches on your supply line. This area is a little bit unfilled, but you're kind of testing that supply line. You still have a ton of resistance between 12 and 13 bucks, but that's interesting. The lower time frames are starting to get interesting again. However, the higher time frames still, you know, you'd want to wait for it to break that supply line. And on the daily, the hidden bearish divergence literally did nothing, which is great. You had it for 1 day, now you're back to being, so hopefully it stays like that. But yeah, it's interesting because if we chart your high over here last December to this high in January, it's crazy that literally just 2 months ago that Fisker was at 17. I didn't even really think about it like that. But if you chart those two together, you've kind of still been back testing, and now you're bouncing off the back test level. So that's Fisker. Amazon had the split after hours, so we could see where it took it to about 20 or almost 3,000. At one point it was at almost 3,100. It pretty much hit this little resistance level. So just let me chart that. All right, so around that green line is where Amazon is currently at after hours, which makes it interesting because then you could also talk about the potential for a drag in here on the 4-hour time frame. It does something like this tomorrow morning, and then you're going to be testing your supply line. So that could be a big level to watch in Amazon. You know, how does it react to the supply line? Draw this on your 4-hour, your daily chart, and see how it reacts to that supply line level. First split in like I think 23 years. Their last split I think led to it dropping a lot, but over like the course of a year. But it was Amazon in 1999. It was a very, very, very different company. It was not like one of the largest companies in the world back then. So that's good because Amazon was kind of breaking down from this right angle descending broadening wedge, and it pretty much is back above it for now, which is interesting. So we have that going to tomorrow, and then that could even almost create you, or does create you, classic bullish divergence on the daily, definitely on the RSI. So I'd say in general for Amazon, 28.85 is a level you just want to stay above. And remember, it's already up at like 29.60 or something, I think it was. So that's Amazon. Nothing really crazy from a technical standpoint, just really big news coming out after hours. I mean, a lot of people have waited for an Amazon split for years. So that's a big move. And now we're going to spend some time talking about Tesla. Make sure to hit the like button, hit the subscribe button, check out the links in the description. There's a crypto donation link for Ukraine. There's the free course. There's the Discord. There's premium. Prices are going to be going up in a couple weeks for premium. It's going to be the last price raise for a while. So unless you want to be buying at the top, you can wait for a few more weeks. But I'm probably going to do this price raise and then wait like months, like probably 4 or 5 months. I don't know. But we're pretty much getting to the price where I feel that I wanted to initially have it at. I just kept it, you know, I guess undervalued for like a year so I could get, you know, people who wanted to see what it was like in. And I mean, we've kept a very good returning rate. Not a lot of growth lately with anything. YouTube, Twitter, Discord, like everything's just kind of been flat. But members who had already signed up have been staying signed up for the most part, which is good to see. And now we're going to move on to Tesla, which is very interesting. Okay, put out a tweet earlier. We're going to start with the weekly, then we're going to go down to lower and lower time frames. Okay, first off, you have all of this. We're going to start with this bullish pin bar candle from last 2 weeks ago. You had this bullish pin bar candle. Okay, that was already confirmed, and now you have 2 weeks of kind of at least holding it, right? So just on a pin bar on a hammer, all you want to do is just make sure you don't break under its low. So you've now spent 2 weeks and bears were not able to take it back under that low. Okay, you also reclaimed your 200-day moving average, which is this yellow line. You can see how important it is for the trend historically. You bounced off of it right over here. You were holding it for a few weeks back in last summer, and then you end up completely just going to the moon off of it. And then over here you fell under it for a little bit, but now you're reclaiming it. It's been a very historical long-term support for Tesla. You also have a trend line bounce, right? If we take a look at this purple trend line, you have multiple touches of this trend line, and your low of the week was literally a perfect bounce on that purple line. And you're breaking out of this falling wedge you've been in since all-time highs, which is these 2 green lines, so you'll see it a little bit more clearly on the daily. And you have potential hidden bullish divergence. So the weekly is just so many different charts lining up. I mean, not charts, so many different variables lining up. And then on the daily, you can see it a little bit clearer. You just reclaimed the 200-day moving average and closed above it, and you're now retesting the supply line of this wedge. I originally had it drawn like this, but you really didn't do much. But even if you draw it like this, you broke out of it, and then you just spent a week completely back testing it, and now you potentially have a break, hook, and go. So it's looking very, very interesting to me. You even had the classic bullish divergence on the daily at this low. You also found some support around 781. You consolidated at this level last fall, and you bounced off of it on February 25th and yesterday as well. So those are your higher time frames. On the lower time frames, you can see this wedge back test a little bit clearer. And then on the 1 hour time frame, you can see it's holding this support zone, which it dates back quite a while. I mean, it was support back last February, resistance last September, support over here. Didn't really do anything over here, but this is when Russia was invading Ukraine. So everything was just kind of going to the floor. I don't know what word to use, but It's bounced off that support yet again. And on the 1 hour, it's breaking the supply line. I mean, however you draw the supply line, whether it's here and it already broken and back tested it, or here, which is even more extreme, which means it's harder for it to break out. You can see it's pretty much at this breakout point. It's not super confirmed yet, but 1 or 2 more days and you have a confirmed breakout on Tesla with major variables on the weekly. Even on top of that, I was looking at a couple other things. So we take a look at Bollinger Bands. So you can see how big of an area this is. So you're testing that 200-day moving average, this wedge supply line, and your middle Bollinger Band at the same exact time. So a break above this area is multiple breakouts. It's a 200-day moving average, middle Bollinger Band, and supply line level breakout. On top of that, you also have EMAs, in which you're also testing this. You're testing that this yellow line over here is your 20 EMA. So literally you're testing, I mean, look how many lines are about to be on the chart, okay? Look how much, I mean, you can't even like see the candle at this point. That's how much is being tested at this level for Tesla. It's such a big make or break level, which is why I'm keeping a very close eye on Tesla going into the end of the week and going into next week, and just in general at this point. I've kind of not really looked at Tesla too much. I actually had a pretty rough streak trading Tesla last month on this downtrend. But now I think you're in such an important area technically for Tesla that I wanted to spend some time talking about on stream tonight. So EMAs, 200 MA, Bollinger Band, supply line. It's a very, very big area for Tesla. And 2 or 3 green days and you could be potentially out of this downtrend. We'll see. Of course, you're gonna need the market to align with that. It moves just like a lot of other large cap tech stocks. And yes, I'm calling Tesla a tech stock, not an automobile stock, because it's priced and valued as a tech stock. So there you go. That's Tesla, keeping a close eye on it. Apart from that, I mean, what else is on my watch? It's AMD. Nothing's really changed on this one. I always get asked about AMD. It retested previous highs, support multiple times. $100 is a big level on AMD. Hopefully you can just hold that. Nvidia, another big one. Bounced off of 209 yet again. Now it's retesting 231 resistance back from last August and September. Also, you have your 200 moving average, so it's going to be testing a little bit of a resistance shortly if it continues a little bit higher. Square was up 11% today. Had a nice move right after earnings, which, I mean, look how technical it was. A 786 retrace, back tested the previous highs of support. Had a nice gap up after earnings, and then it filled the gap, and now it's going higher again, so you have that as well. So a lot of different things going on. Now let's move on to the swings. Facebook was up 4% today, very close to getting stopped out, but it did not. And now it's moving back up, so now you might have a potential slightly lower low double bottom at the PCZ if this holds. So good that Facebook is holding up for now. Unfortunately, Netflix, not unfortunately, for those who are still in, congrats, but Netflix got stopped on the sheet yesterday. Now it's back up big today. But I mean, even on Facebook, what if you look at it like this? That's really interesting. A little bit of a dragon at the PCZ of this cipher. So that's Facebook. And then the new swing, Smile Direct Club. You've been seeing this on stream for weeks if you watch the stream. The long-term wedge breakout. I originally charted this as, I think just as a bat with like a 55% retrace, something like this. Like that. No, not like that, 1 second. Like this. This is how I initially had charted it. I decided to just look at it as a shark instead. It's a little bit cleaner. You don't have to worry about it being 5% under the B point. So hit the PCZ of a bullish shark. That took 2 years to be created, pretty much. It's breaking out of this long-term wedge. Let's go on the weekly. Let me draw a supply line here. All right, it's breaking out of this supply line of this long-term wedge on the weekly. You can see that this is pretty much the breakout week, or even last week was. It's double bottoming at the PCC of this shark, right? If we zoom in a little bit over here, you can see one bottom in January, second bottom right now. You have classic bullish divergence confirmed on the daily. And to be honest, I mean, if you really zoom in, you did make a slightly higher low, but if you really zoom out, like the trend has been such a horrific downtrend. And the other thing is, if you match up this red island, the lowest point of price during this red island was not over here. It was like, I think like right over here. So from the low point of price from this island, which was over here, to your low point of price of this island is like over here, you did in fact make a lower low, and definitely on the RSI as well if you're going from this RSI low to your most recent one. So yeah, didn't like type out the reward to risk on it because I had to like zoom out to share it and they wouldn't fit. But the reward to risks for the trades are, or the trade is 2 reward to risk, 3, 6, and 11. if the fourth target somehow hits, which could take a long time unless there's some crazy catalyst, that would be over a 200% gain on a swing without options, which is crazy. But also, I mean, look at what this stock did, you know. I mean, that's not even like your first textbook target of a shark. That's all the way up at like $8.50. So yeah, I share different types of sizes of targets. The first one being at these highs, the second one being at these lows, the third target being at the 200 moving average and these lows, and then the fourth one being from this high and these lows over here. So yeah, and then the stop, I just put out a new all-time low. That would mean if it did hit that, which hopefully it doesn't, that would mean it would just break to new all-time low and give up this double bottom in a lot of the different formations it's trying to confirm right now. So it is a looser stop, which means you could definitely, or you should be, not financial advice, tailoring your position sizes accordingly. And that is the new swing on Smile Direct Club, the first stock I ever owned. I don't own it currently, but it was the first share of anything I've ever bought, or shares of anything I've ever bought. So I always want them to do well, just for the nostalgia. So we'll see what happens with that. And looks like the Hang Seng Index is up 2% today. I didn't look at this earlier. It's going to be retesting its previous support area as resistance now. Let's see if anything else. Futures are relatively flat. Bitcoin's pulling back a little bit off of 42K. And I completely forgot to have my tea, so now it's cold. Great. This always happens. Finally seeing the BAT weekly sum to the 50 MA. I'm not sure if they're talking about ARC there. We've been looking at the ARC back for months at this point, I think, or the potential for it. I think I started seeing that in like December. I know you've been looking at it for a while too, unless you're talking about a different BAT. How the lump is TNA different than IWM? They're just 3x, I thought. TNA. So TNA, again, they're both small cap indices. I don't know. I mean, is Direxion and Russell the same? I don't know if company is the right word to use, but they're different charts very, very clearly. So that's all I need to say, that they're different. Because Russell hasn't even broken this pre-COVID high. This is well under it. So this is a different way to look at stocks. So I mean, even if it is just a 300%, you could see, you know, the upside was 300% higher, but even I guess the downside's leveraged too. So if you just look at it from that view, it looks a lot different. It shows it a little bit more extreme, which I think a lot of small caps don't really even look how this looks. I mean, this is still 19%, 18% above its pre-COVID crash highs. Or if you look at something like this, I don't know if this was here before. Well, this was after the COVID crash. But I mean, if you look at something like this, it's definitely not, it's completely underperformed even the Russell 2000, which has underperformed other indices. Same thing for something like CLOV. I mean, there's a lot of small caps you can see that went from like $20 to like a penny stock. So what symbol was the new small cap ETF? Not really a new one, I guess, at this point, just a different one. Could be a new way to look at it as well. TNA. I'm Yair Repair says, thanks for all the breakdown. However, you don't need to race through it. Old timers like me, time process. Yeah, I don't know. It's just kind of how I go about reading charts. I don't really do it slowly, I guess, at this point. It's just, I see things a lot quicker because I spend so much time looking at them. So it's just kind of how I break them down, which is, I guess, how I relay those charts to all of you. Thoughts on shorting oil, says Pizza Box. Rule of 7 seems to apply. 7 green days and huge. I've heard of something like a rule of 15 or something. Rule of 15 stocks.
Speak up, child. It was nothing at all.
Oh, whoa. There's a rule called the 15 to 50 rule, which says if you believe you have more than 15 years left on this planet, your portfolio should consist of at least 50% stocks and the remaining balance in bonds and cash. I'm concerned about that. But yeah, I've heard about those rules. There's like different numbers that people use. You know, like a certain amount of green or red days in a row means on that specific day you're going to get a trend change. I don't know the data behind that, but I guess it could be happening. I already talked about my thoughts on oil in general. I mean, there's different charts you can look at. I just look at the light crude oil futures. Based on this one, you have a bearish engulfing candle blow off the top today, and you fell back under a major resistance zone. So I think unless it breaks back above it, I don't like how it looks. It was just massively overbought. But again, you know, it only takes a 5% move in one little catalyst for this to get back above the resistance zone, and then it's back up. So it's high volatility. You know, it's harder to get an actual technical probability on something that's doing something like this. All right. XOM. This one, let's see. Not much I can do. You know, there's just not much you can do technically after a move like that. I guess potential classic bearish divergence on both oscillators. And trying to retest these little resistance areas. Even this previous high from beginning of February. I don't know, there's just not much I can really do here. This was crazy though, look at this, wow. You have these touches on your supply line over here, and look how it broke above it and then back tested it. For people who don't believe in technicals, tell me why it randomly bounced here, please. Did something fundamentally change for it to bounce at this exact price point? Let me know. So yeah, that's most of the breakdown. IMEI Repair says, don't get me wrong, dude, you're awesome. I was just trying to mimic your chart with my trading view. I guess I'll review the video again. If you get a chance, can you spend 30 seconds to draw fib levels? Yeah, just rewatching the videos is probably the best way to do that, or watching the course, which you probably might have already. But yeah, Fibonacci is completely covered in the course. I'd probably say go watch that video in the course. If you want me to do it in 30 seconds, for Fibonacci, you need to understand what swing highs and swing lows are. Right, so these red circles are your swing highs, the green circles are your swing lows. If you want to use Fibonacci for sell targets, you use your fib retracement tool, or whichever fib tool you want, and then you start, or the right fib tool that you should be using according to what you're trying to do. You start from your previous swing high down to your current swing low, and then you extend out to get your selling Fibonacci targets, and then vice versa. If you're looking for buying targets, you're going to be going from your previous swing low up to your most recent swing high and extending out, and you can see, look, it came down to the 786 and perfectly bounced at it. So that's the quick way to do it. But remember, just for selling, you're going high to low, and from buying, you're going low to high, and typically you're going left to right because charts move right. So yeah, if I just messed up any of those like words or something, I'm sorry. I just like saying things like left to right and high to low and higher lows and lower lows, like all those things, they get a little bit confusing to repeatedly say. So just make sure you watch the course. It should be good in the course. And Cheddar Freeze just dropped the link to the course in the chat. Make sure you check out the links in the description if you didn't already. And yeah, I think that's going to be it for tonight. Make sure you hit the like button, hit the subscribe button. I'll probably be live tomorrow night, and hopefully you enjoyed the stream. So yes, all right, have a good one.